Hi everyone, welcome back to the podcast. Happy Saturday. I hope you had a wonderful week and you're ready to enjoy your weekend. Before you get into enjoying your weekend, me and Dhana are here to offer our 2 cents about stocks and investments and creating wealth. So if you do find this boring, bear with us. Maybe you'll garner some information in this video which will inspire you to invest and to grow your wealth and finally achieve some freedom in life. Who wouldn't want to be free of the burden of money? So what do we have today, Dhana? How are you going to free our tribe?
Only by the way of investing.
Very good. So tell me.
Today I come with the Dr. Reddy's lab results. So I read out the results, sir. First, the profit was reporting drop of 9.5% in their consolidated net profit. Compared to the last year, it was 1,482 crore. Now it was 1,342 crore. So 9% drop. It was missed the expectation of the analysts. So that was the main thing to attack that stock. And another reason why the stock was down was weighed down by pricing pressure in the competitive North American market. It was the biggest revenue of the Dr. Reddy's lab. And then Dr. Reddy was also hit by one-time charges related to this joint venture with Nestle India and Nicotinamide acquisition. Its second quarter total revenue from operation of the current fiscal rose to 16.5% to the 8,016 crore from its revenue on the North America only and climbed 17% compared to the 6,880 crore from the last year. Dr. Reddy largest attributed the sales growth in only on the North American region. Almost 15% of its revenue comes from the North American. So that was erosion by the price affection. Price. And since its launch in the 2022, drug makers have been benefited from strong sales across the North America for generic version of Bristol Myers Squibb popular cancer drug treatment. And then the gastrointestinal treatment and the cardiovascular issues treatment, that sales was boosted in the North American region. So now the negative point was come. Dr. Reddy reported an impairment charge in the quarter under the review due to the supply chain constraint in the US affecting the generic medical products, and the revenue from the Indian business also dropped, and it was the negative thing about that company. Its overall revenue from other segments also fell 73% in this quarter. 17 crore has been down. Same correspondingly, revenue from the global generic segments surged 17.7%. On the operating front, Dr. Reddy earnings before tax, that EBITDA during this quarter 3.5% rose. So from overall this statement, that Dr. Reddy co-chairman G.V. Prasad had said, we delivered a good quarter and maintained the growth momentum across the business. We made progress on towards the future growth and drive that operations and join the joint ventures with Nestle and complete the acquisition of Nicotinamide related brand, and we will continue to drive efficiently. So it was the total statement that they submitted on the Q2 results. I think the result was good. Revenue was not met the expectation of the analyst, but the revenue and the profit after tax, almost everything was good. The negative sign is that North American sales and the acquisition part only the negative thing. So what's the...
Well, Dr. Reddy is a very old company and they're a big company. They're not a small company. And I feel it is a great opportunity to consider it. Now, if you look at it, in the last year, the P ratio, if you see, right, it's been near 20. And right now it's trading at PE. That means it's at level.
Sure.
So it's, even if you're looking at a 1 year time frame, you're not going to lose, you're not going to gain. Right? And if you look at 3 years, it's also about the same. But it gets interesting as value investors, you and me are. Now let's look at 5 years. Dr. Reddy is usually at 25. And 10 years, it's usually at 28, 29. So if you look at it there, it is a great value right now. And they've done a wonderful thing of splitting the share. Before, it was very expensive. 6,000 rupees and plus was not anywhere near our tiffin coffee range. We could only aspire to own Dr. Reddy. It was way out of our range. Now that they split it, it's become cheaper than Natco. Right?
Cheaper than Natco.
Yeah. Natco is a much smaller company to them. Natco, like my brother keeps on saying, the way their business model is, they find a drug, they find out how to reverse engineer it, they make it, they fight lawsuits, and then they make profit. They beat the lawsuit and they make profits. And they have one drug cycles and they go through this. Dr. Reddy is not like that. They make active pharmaceutical ingredients, they make biosimilar products, and they have generic products, and they're huge. So it is a great company. These things are cyclical, and these are opportunities for value investors like me and you to dip into it. And if you see even dividend yield compared to Natco, Dr. Reddy offers a far better dividend yield also. So there might be, normally people when they see something going cheap, Mr. Market like people and participants like you and me will either react. One, the price is too high, we'll feel like, oh no, we can't afford to buy it. It's very expensive. When it becomes affordable and we can buy it, then we're like, oh no, something must be wrong. That is why it's cheap. So somewhere along the line, the reason why you feel like that is because you do not know anything about the company. So if you see gold, if gold becomes expensive, like, oh no, gold has become expensive, we can't buy it. If suddenly the price of gold corrects, like, oh no, gold is going to become cheaper and cheaper, we can't buy it. We'll go and lose money. It's because we do not know anything about the gold market. This is a place to have stocks also. So if you feel this, if you feel like, oh no, why is it become so cheap? That means there's something wrong, then read about it. Study the company, like what you have done, you know. Just don't read the results in the news and then decide to buy or sell. If you read the news and you have shown interest in Dr. Reddy and you do not know anything about Dr. Reddy, my first advice to you would be go read about the company. Read the history. Find out who created this company. What all have they been doing? How long have they been doing? See the complete history of the company. Right? Consume all that. It won't take you longer than a day or two. The price is not going to go anywhere. Don't worry. Immediately, a lot of people immediately in our group will say, what about we wait so long, the price might go up. Don't worry. It's not going to go anywhere. Right? If anything, a stock move in India right now, the way it moves by in a day 2%, 3%. And if you're looking at value buying, where Dr. Reddy is sitting, it's going to be in value position for quite some time. Yesterday, because of Trump's announcement of victory, it zoomed by 3%. Then today, again, it's under selling pressure or profit booking or whatever nonsense you want to say it. It's down another 2%. So if you see, this ebb and flow will always keep happening in the market. So you'll have opportunity to buy it. But what you will not have an opportunity to do is, unless you dedicate time, is to learn about the stock, to learn about the company, which I suggest you do. Because if you don't do that and you buy, because you watched our video today, and you decide to buy Dr. Reddy, suddenly the price again goes down by, let's say, below 1,000, becomes 900. You will not have the confidence to accumulate more. What you'll have is fear, and you'll want to sell the 1,200 rupees what you bought, you'll want to sell it. Because you'll be like, I don't know, I've already lost 300 rupees, let me sell it. Because that can happen. The way Trump is, talking about tariffs and what's going to happen in Europe, him pulling out of NATO, whatever nonsense he does, is going to create short-term pain for everybody in the world. Just not for China or just not for any. The way he is going like a bull in a China shop, he's going to create pain for the next 4 years for a lot of people across the globe. And markets are going to go. But we are not in the market for 4 years or 1 year or 2 years. We are here going to be here for 10, 15 years. And if you have that horizon, Trump will be long forgotten, right? Like every single leader who has come, fortunately in the US, he can only serve 2 terms. He's going to serve this term. So what? If you are for him, good for you. If you're against him, don't worry, in 4 years it will be over. It's not going to last forever. He's not going to be like an African dictator who is there for life. Right? In Africa, they'll have a guy who will by free election will get into power. Once he gets into power, he'll never leave. We've seen it in Zimbabwe and everywhere else. America is not that. 4 years from now, he'll do whatever he can do maximum, and then he has to leave. Then the next guy will come, wherever he comes from. So this is the attitude you should have. Whatever the ripples you see from Trump and you see and all this is temporary. So if you see value in the companies you're looking at, be it Dr. Reddy, be it Natco, be it in any pharma company, you should take this opportunity and be brave. But you can only be brave if you
Study about that company.
Which our boys and girls fail to do. So I generally encourage all of you to sit and learn and read before you start buying. Don't worry, the market is not going anywhere. The market will always be there.
But only fear appear after the reading of shareholding pattern. Majorly, Dr. Reddy shareholding pattern of promoters 26%, FPI is 20%. If they dump the selling of...
If FII sell and they dump it, is good for us. That means there will be pressure on the price. The more they sell, good news for us. But like I said in the earlier video, that was before this election cycle. Now the current election cycle finished. Trump is going to be the president, no doubt. He doesn't like China. Right? Him and China have a tough relationship. So what happens in the next 4 years might force the FIIs who all left India and gone running there. If he starts imposing tariffs on Chinese, and the Chinese do it on American investors putting money into the Chinese stock market. They start, because China can only punish who? They'll punish the FIIs who are dumping money in China. Because they do not buy anything from US. US is nothing that China wants. And then Chinese, so he'll want to hurt them back. So if this gets into some kind of ugly mess, then those guys will pull the money out and come back to Indian shores. So that might happen too. So these opportunities, FIIs don't invest based on that. Invest based on finding value. If you see value, invest.
Invest.
And right now, Dr. Reddy is definitely in consideration range, like my brother keeps saying. So consider Dr. Reddy.
Okay, sir. Next video, I come with the history of the Dr. Reddy and I complete analysis of the Dr. Reddy and then get back to you, sir.
Done. That sounds interesting. Anyway, thanks for watching the podcast, guys. I hope you found this video informative and entertaining and took some solace in the fact that we're all learning and you can also start learning today. Time is now, and there's no time like the present to start learning. As soon as you're done with this video, whichever company you're likely to invest in, I strongly suggest you go read about the company, learn about the history, the promoters, and what they've been up to before you start buying. That is the lesson which I want to share with you from this podcast. Thanks for watching the podcast, and me and Dhanal see you again tomorrow. Thank you.
Thank you.